OCBC just released their first quarter 2025 results this morning. And yes, profit dropped 5% from last year. But hold on, they beat expectations, and profit actually jumped 12% from last quarter. So what's really going on? In this video, I'll break down exactly what these numbers mean, what's fueling OCBC's growth, what risks to look out for, and whether it's still a good stock to own in 2025. Especially if you're looking for steady dividends or long-term value, this is one you don't want to miss. So stay till the end to get the full picture. And if you're serious about building wealth, smash that like button and subscribe to Wealth for You, where we simplify smart investing for everyday Singaporeans like you. Disclaimer: this video is for educational and informational purposes only. It is not financial advice. Always do your own research or speak to a licensed financial advisor before making any investment decisions. Part 1. Quick background on OCBC. If you're new to investing, here's a quick intro. OCBC stands for Overseas Chinese Banking Corporation, and it's Singapore's second largest bank. It's been around since 1932 and is known for being very conservative, very stable, and highly profitable. OCBC is also Southeast Asia's second largest bank by assets. Part 2. Q1 2025 Highlights. So here's what happened this quarter. OCBC reported a net profit of 1.88 billion Singapore dollars for the first 3 months of 2025. Now, on the surface, that's a 5% drop from the same time last year. And that's mainly because interest rates have been falling, which means the bank earned less from its loans. Lower interest, lower margins. Simple as that. But don't let that number fool you. Compared to just 3 months ago, OCBC actually grew profits by 12%. And that's a solid rebound. So what changed? 3 things. Wealth management fees shot up, more people are investing, and OCBC earns when they do. Trading income climbed. OCBC made more from its treasury and market activities. And here's the big one. Insurance income more than doubled. That's a huge bounce back from last quarter, thanks to better claims and investment performance at Great Eastern. So while the headline number might look like a dip, what's underneath shows strength, and a business that's still adapting and growing. Part 3. Strengths of OCBC. Now you might be wondering, is OCBC still a strong bank? The short answer, yes, very much so. And here's why. Even in a tougher environment, OCBC's business kept growing. Their loan book, basically the money they lend out to people and businesses, grew to 322 billion Singapore dollars. That's a 7% increase from a year ago. At the same time, customer deposits rose to 403 billion Singapore dollars, showing people still trust OCBC with their money. And when you look at the health of the bank itself, OCBC is in excellent shape. Their CET1 capital ratio, which is a key measure of how financially solid a bank is, stands at 17.6%, comfortably above regulatory requirements. Their loan-to-deposit ratio is at 78.9%, meaning they're lending sustainably, not overextending. Plus, only 0.9% of loans are non-performing, which means over 99% of borrowers are still paying on time. That's a sign of strong risk management. But here's the most exciting part. OCBC's fastest-growing business right now isn't traditional banking. It's wealth management. This includes private banking, insurance, and asset management. In the first quarter alone, this segment brought in 1.37 billion Singapore dollars. That's 38% of OCBC's total income. In other words, OCBC isn't just relying on interest from loans. It's diversifying into higher-value fee-generating services. And that's a big reason why long-term investors are still paying close attention. Part 4. Weaknesses and risks. Of course, no stock is perfect. Here are some things to watch. Net interest margin, or NIM. This fell to 2.04%, down from 2.07% last year. As interest rates drop, banks like OCBC make less profit from loans. Higher allowances. OCBC set aside more money for potential bad loans, even though things are still okay for now. That's them being cautious because of global uncertainties like trade tensions and geopolitical risks. And while wealth management is booming, OCBC still lags DBS in digital innovation and global reach. Part 5. Conclusion. Should you consider OCBC? So, is OCBC still worth considering in 2025? If you're the kind of investor who values stability, steady dividends, and a bank with deep roots in the region, OCBC is still a solid choice. It's well capitalized, conservatively managed, and not just sitting still. It's evolving, with wealth management becoming a major growth engine, bringing in nearly 40% of its total income. In a time when markets are shaky and interest rates are in flux, OCBC gives you something rare: resilience. And with Singapore's financial sector staying strong, OCBC is well positioned to ride through the noise and grow quietly in the background. It might not be flashy, but for long-term investors, that kind of quiet strength can really compound over time. Do you own OCBC shares? Or are you thinking of adding it to your portfolio? Let me know your thoughts down in the comments. I'd love to hear from you. And hey, if you found this breakdown helpful, give this video a like and subscribe to Wealth for You. This is where we make investing simple, clear, and relevant, especially for everyday investors right here in Singapore. Hit that bell icon too, so you never miss a timely update on the markets or the next great dividend stock.